Hello, and welcome to another edition of 360 Half Seconds. My name is Kia from 360 Vet Sales, and with me today is 360 Vet Sales CEO Matt Arena. Matt, how are you?
I'm doing all right. How are you, Kia?
I'm doing well. So before we get started, I just want to remind everybody quickly how this works. I'm going to give Matt a question or two. He has 360 half seconds or 3 minutes to answer those questions. Um, and today's topic is one that everybody loves, which is accounting. Super fun, super exciting. But in all seriousness, it is super important. So Matt, we've touched on this a little bit in the past, but in addition to running 360 Vet Sales, you also own an accounting firm called
Yes.
WTB Accounting.
Yep. Correct. Yep.
Okay. Um, and I just want to get that out there so the people watching this have some context as to where your expertise comes from with this specific topic.
Yeah.
So, Matt, we get clients from all around the country, and they use different accountants. Sometimes they do the accounting, in-house. And what we've realized is that not all accounting is the same. The accounting that you might do, for your day-to-day practice may be very different than what the accounting needs to look like when you want to sell your business. Please define what good accounting is when it comes to preparing to sell your business, and please tell us why that matters.
Yeah. Really good question. And something that I'm probably a little more passionate about than other things because it is so important. The number one reason it's really important is because when you go to sell your company, any group or buyer that buys your company is going to do what's called due diligence. And deals fail. And so what you're doing is you've built this company, you're going to wind up with a multi-million dollar deal, something that you're going to do once in your life. Maybe you do it more than once, but most people only do it once. And that's like your retirement egg, whatever you want to call it. And you're putting it at risk if you don't have good accounting because it could fail through due diligence. So let's back up though, and we can dive, I'll let you ask questions, but let me dive into the different types of accounting because this is everybody in the world needs to know this, and it's not something that's common knowledge, and a lot of people don't know. So there's three different types of accounting. There's tax accounting, and tax accountants, which a lot of people just say my accountant, and it's really their CPA tax accountant. That is someone who specializes in doing tax returns. So reporting the state and federal government, completing tax returns. It's not to say that these individuals don't know accounting or don't know how to do debits and credits and can't do your accounting, but a lot of times their focus is getting an 1120-S done or whatever your tax form is and getting that submitted. So they're doing your accounting in order to serve a purpose of doing your taxes, not running your company.
Sure.
Some do a better job than others. I'm not knocking it. I'm just trying to label the specializations. So you have tax. You also have CPA firms that specialize in doing audit. Audit is, you go through a typical audit. They're checking things for accuracy. They're doing sampling checks, things of that nature. The third type, a lot of people commonly refer to as bookkeeping, but it's more of what I would call managerial accounting. And by way of example, WTB Accounting is a managerial accounting firm. This is where we're doing the accounting in order for you to better have visibility and manage your business. So we're not just lump sum entering things in. We're making sure that every transaction has a vendor name, a memo, and then there's more things that go into it that are even more important. So if you are wondering about your own accounting and you're going, geez, I don't know, do I have good accounting or not, or what is the situation? Here's the questions that I would ask you. Is your accounting being done on cash or accrual? Preferably, you want to be done on accrual basis, meaning you're matching revenues and expenses in the months that they occur. So you don't have unnatural volatility in your profitability each month because maybe three bills don't come in 3 months in a row and then you get them all at once, you enter them all at once. That doesn't give good visibility into your accurate numbers.
Good point.
So cash versus accrual is really important. Yes, you can sell if you're doing cash basis, but you really want to make sure that everything is really clean and neat and you don't have unnatural swings in your numbers. The second thing that I would say is even more important than the first. Is all of your accounting reconciled to a source document like a bank statement or a credit card statement on a monthly basis? And you want to make sure you don't have any unreconciled transactions. Unreconciled transactions are transactions that don't show up on a source document. We see it all the time. Well, if those are in your books and you have expenses in your books that aren't reconciled, generally that means you probably double counted expense. And if you double counted expense, You've now lowered your profitability or your EBITDA, and you're going to get a lower valuation. This is why this stuff is really important. The two things that I think are really important: make sure all your transactions are entered on a detailed basis, vendor name, memos if necessary. Second thing, reconciled every month to your bank statements and credit card statements so you know everything is complete and accurate. If you're not getting those two things, you're really running a risk of getting through due diligence. And you could be sitting there thinking you have a good deal, going through the emotions of having a deal, get 15 to 30 days away from closing and find out we got to change the offer and lower the number, or maybe even pull out of the deal because your accounting wasn't good enough. And we just don't want to see that happen.
And there's a situation there also where, if you just see a few things that are off, if the buyer sees the few things that are off, they're going to start making an assumption that, hey, these are just the few things that we caught. There could be other things off
Right.
too. So you're basically kind of creating smoke where smoke doesn't need to exist.
And a lot of people in the buying shoes will say, well, if we smell some smoke, there might be a fire. And you just
Yep.
you don't want to see that happen. Spot on.
Yeah. And so let's just say, you've done, and I know we're probably a little bit over time, and thank you so much for this answer because this is such an important thing because we see
Yeah.
this way more often than I think most people realize. But let's just say you've done your accounting or your accounting is being done, let's say by a CPA or one of the first two types of accounting that you mentioned, and it's not being done in the form that you think is best practices for selling your business. What do you do in that scenario? Like, you can't go back and uh, reverse time. So what do you do in a situation like that?
So there's two different options. The first option is, generally speaking, people will tell you best practices when you think you're going to sell, you should be preparing to sell 2 to 3 years in advance. That
Sure.
would allow you that timeline of having 2 to 3 years of good accounting because you can make the changes or adjustments. You can ask your tax accountant, hey, I saw this video. These are the things that I know are important. I don't believe we're doing those things. Are you guys able to do those things? They might say, yeah, we can do it. It's just going to cost a little more. Worth every penny. If that's not the case, contact us at WTB Accounting, or you can always find another type of accounting firm. But we're happy to do a quick look, and we can tell you, hey, your accounting looks really good. You're dialed in, or yeah, we can do this for you because you do need to make a change, and this is what it looks like. The third option, and I don't love this option, but the third option is you're ready to sell. You're like, I'm ready, and my accounting I don't feel is good, but I don't want to have any hiccups when I go to sell my company. We can do it again, whether it's through 360 vet sales, because I'm involved, I know this stuff inside and out, WTB accounting. We can do a quick look and say, we think this is good enough, or no, we need to go back 2 or 3 years and kind of redo your accounting. There's going to be a little bit of a cost, but that little bit of a cost is so peanuts compared to what you're putting at risk when you have a $9 or $10 million deal for your vet practice, and it could fall apart in due diligence because the accounting's not good.
And on the flip side of that, if it gets cleaned up ahead of time, that $9 or $10 million deal may end up being worth even more than that. Not only will you
Correct.
not lose, you might actually gain. That $9 or $10 million deal may become an 11 or $12 million deal if your accounting is set.
I always
Because
tell people if your accounting comes in a nice, beautiful package with a red ribbon on top, your
yeah,
valuation multiples and the valuation you're going to get is going to be higher than the alternative.
well,
Every
it's the opposite of smelling smoke, right? It's
Yes.
like when smelling smoke when something is off, the buyer is going to take that into account. At the same time, when everything is pristine and looks great, they're also going to take that into account in a positive way.
It builds confidence. I mean, if you're the
Absolutely.
buyer, it's like, I have confidence that this car runs great.
Yeah, and that's
You're
and
going to pay
that's
more
what you
for
want.
that.
That's how you're going to get through due diligence and
Right.
due diligence. You want to get through it smoothly. So, Matt, I know we went over, but this was a really important topic. Thank you so much for speaking on it and really giving detail behind it. I don't think most people understand the difference between all the different types of accounting. So this was really helpful. Um, so as Matt said, if you're somebody that wants us to just take a look at what you already have when it comes to your accounting. We will put a link to WTB Accounting in there so you
Yeah.
could speak to Matt directly about that. Or if you want us to just look at your practice in terms of you think you're ready to sell now and you want us to take a look to see if it's ready to go to market, please reach out to me at Kia at 360 Vet Sales. That's KIA at 360vetsales.com. I'm happy to set up an appointment with you one-on-one. We're going to take a look at what you have with Matt and let you know if you're ready to go to market or not. But we'll tell you exactly what we think about where you stand and what your prospects are.
Awesome. One last thing before we go. I've got one last thing.
Sure.
So through WTB Accounting in our accounting firm, I cannot tell people how many times we've looked at their accounting as they prepare to sell or are really close to selling, and we find things where they have prescriptions or drugs and they pay $2 and they're charging their customers $1.90. They're actually losing money on every transaction. It's
And you know what?
another
That's a
reason.
great point. Another reason to have somebody just look at your accounting is to make sure that you have the right
Yep,
margins. You shouldn't be losing money on the things, that you're providing to your customers. Um, because that will get adjusted when you go through a valuation
yes,
process with the buyer. So you'll end up losing on the back end. So just another good reason to have somebody just look at your accounting. We do it as a courtesy. So, there's no risk in at least just having us take a look at it.
absolutely. Sorry to
Okay.
add that at the end,
No,
but
no,
it
it's a
was
great
real
point.
important. Yep.
It's a great point. It's a great point. Okay, well, Matt, thanks so much. And until we do this again.
Yeah, thanks, Kia. Appreciate it.